The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. Monday, Wednesday, Friday, 11 o'clock until noon. 877-927-6648 is the number to call. And we start right at 9 o'clock Eastern Time. Steve Rhodes, great show as always this morning. And then Tom O'Brien and Steve together, just a fabulous show together. Just a lot of information. And then I come along 11 o'clock till 12, and after me is usually Larry Pesavento. And then we have, we have Dave White at 3 o'clock. And Tom O'Brien comes back to wrap it up at 4 o'clock till 6. So we've got this information right here that the Dow is up 61 at 12,910. Now that's fascinating. Why? Because there's strength in the Dow. Now, I've been telling subscribers for a little while, and I've been mentioning on the show here, that I believe we're in a rotational correction. And I'll go through some of these charts in a split second. But I just wanted to mention that this rotational market means very often that while one group within one sector corrects, another group within that sector can correct, meaning coming down, can actually rally and sustain. 3 stocks could sustain 5 or 6 going down. In the sectors, what you would be looking at is virtually the same thing. That within the market, there are certain sectors that are going to be holding up well, while other sectors, especially the ones that are overbought, and remember I spoke about the Qs, I spoke about Apple, I spoke about the way those IBD stocks, almost all of them were getting to peak D, E, or even F in my work in the ChapmanWave. Well, let me just explain what that means. When you go to the most, charts, here they come, my error, I forgot, I'll get them right up. If you're looking at Tiger TV, there they are, one click. There it goes, and here comes the chart, there it is. My apologies. Now, if you're looking at Tiger TV, you will see the charts, and what you'll be seeing, well, right now I've got the Qs up. I'm going to go through all the different, because it's the beginning of the week, I think it's appropriate. And even within the high-tech sector, there are stocks. Now, do we know whether well, we're not even 2 hours into the day. Do we know exactly where the close will be? Well, this is fascinating, and I'll explain why. The huge gap to the upside and very sharp decline earlier today, and this rebound is unlike what you normally see in a true bear market. Why? As you know, I've been saying that a true bear market, my experience with a true bear market, is that you should see at least 2 really ugly triple-digit consecutive down sessions. Every bit of news, good news is treated as bad news. Bad news is treated as good news. Invariably, the futures will open down and then continue lower. So this is unlike what we've seen. I had an email over the weekend. One of our tigers emailed me to say, this is a person who's been in the, when I say been in the markets, although it's not their profession, they have literally been in the markets for over 50 years. And, over 50 years. And this person emailed to say that this is so different to what they've seen before. And you know, I must say, when I'm looking at the charts, I look at the chart and I say, is this a pattern that is recognizable, familiar? What am I looking at? And I love to do that and say yes or no. And most of the time you will find that, for instance, when the market was down Friday, the S&P was down 17, and this person says, S&P down 17 points, and the Dow's only down 130. It should have been 170. Actually, I think it should be 150. That's the ratio that I always look for. And says it's an unusual market. And I say, I don't believe that you've got to treat it as an unusual market. If your expectation is one thing and something else is happening, then it's an unusual market. Now, let me explain why. If you look, let me just finish the numbers. So the Dow's up 80, S&P's up, down. It's up a point at 1371. Comp index is down 17 at 2993. Gold is down 7. I just see nothing in gold right now. At 1652. Silver's up 0.06 at 3145. Platinum is down 8 at 1575. High grade copper, I do see that, at 360 down 225, and we'll talk about that. Crude oil is down 52 cents at 102.31. And, we won't talk. We'll talk about it right now because I'm bound to run out of time. We'll forget. High-grade copper pulling back like this is still within the bounds and boundaries that one could expect. But if it starts to crack and go under that 350, 340 area, that's something else. Now listen to this. Bonds were up very sharply. Now they're up 19/30 seconds at 142.01. How do we put the package together? Well, we were short last week. We took some profit, small profit in the QID. Actually, the one I really wanted to be holding right now was the QID, but we took a little profit, much nicer profit in the DXD, the 200% short on the Dow Diamonds, on the Dow 30, that is. But I did not want to do anything today in terms of the indexes. And there was a really good reason for that. When I looked at certain very important charts of, let's say, high-tech stocks, what I was looking at, and I'm going to go to this chart that you can see now. This is the 120-minute chart, made a peak F-top in the Qs at 68.51. That's what I call the right arm extension. It should have been could have been a leg A, B, C, but in fact what happened is the stochastic broke down even before it made the high of 68.51. Now look at this. You've got a left side risk, right side price time match, which broke under the 66.08 low of mid-March, went to 65.92 a few days ago, ran up quickly to over 67.40s or so, and then today comes down where? It comes right down to the 200-period exponential moving average. That exponential moving average is at 65.31, and it stops at 65.24, and now it's rebounding a little bit. Okay, that's a little bit. So that says we've met our first goal. Let's look at the weekly chart. Hey, wait a minute. That 35.27 low of the gap on the 13th of March with a 65.11 high the day before, that gap was just briefly filled today at the low of 65.24. And there's a left. Now, these are the techniques in my CD introducing the ChapmanWave methodology. I talk about this a lot. That inside wedge that can give you a left side, a right side price time match. Well, it came in day later. Listen, you're going back all the way to March the 13th. You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 18, 19, 20, 21, 22, 23, 24, 25, maybe 25 days. And it misses by 1 day, touching that level. Look at the inside wedge, which gave you that exact support level. That's what I call the ChapmanWave inside wedge. It's a diagonal trend line. Even more important, look at the way the stochastic is holding here at 25%, trying to make a W formation. Can it go lower? Absolutely. It can go to the 9% or 10% area. But the MACD is really the thing to watch. That says we're still in a sell mode in the Qs. That's the NDX 100 trading vehicle, the QQQ Power Shares Trust. But if the stochastic can start to hold, and there could be a bit of a rebound here, then it makes that 65 area even more important to hold, because if we break down in the next 2 days below that, we close below it, that'll say, uh-oh, trouble. Now in the rotational part of it, what we've got is that the weekly chart is still very strong, but it has tested the 9-period exponential moving average, which is at 85. I might be off by a penny or two because it's being covered, but it's around about 85.51, and right now it's at 85.67. But that MACD fast moving is still very positive, even though it's pointing down because it hasn't crossed negative, number one. And number two, the stochastic is still at 88%. And the monthly chart is still very strong. I'm suspecting, now we're going to go to more details. When I spoke about Apple as possibly making a peak E-top at 644, most packages have 644.00 round number high. I have it at 64.05. That trade station has sometimes slightly different numbers. That round number high said to me that if Apple closes below the 9-period moving average, I spoke about this last week, especially with the divergence between the weak MACD, moving average convergence divergence, and that inverted V-shaped unbalanced volume turnaround, Apple could start to break. I said to Tom on the radio the other day that if Apple starts to crack the 616 area, it's going to go quite a bit lower. The very next day, it broke under that. It went to Friday, it went to 603, and this morning's low is where? 582.20. The level that I've been talking about for subscribers is that 575.40 gap on the 13th, and the high the previous day was 568.18. So you've got pretty darn good gap there that at some point, and it could be fairly soon, could be filled. There might be a bounce beforehand, but that's an area that I'm looking to, and I suspect when we get towards that area, we've got to start thinking of some kind of a counter trend rally in Apple, but that's not the only thing. Let's look at Priceline, PCLN. Priceline is trading at 712.26, down 22. It made a peak E high, also with the MACD failure on the confirmed. It actually was confirmed the day of the high, 774.96 all-time high, with a close down. It had a low of 739 and closed almost at that level at 741. Right now, it is broken underneath key support of 709.43. Hey, this is really important. Look at the way the stochastic has plunged down to the 42%. This is a stock that was trading up in the 90% area for months. So now what we do is we go to Priceline, we say, wait a minute, where are we in the weekly? Well, now this is going to be a test of a lot of things. I can't see any. 553.33 was the high on the 11th of November. 549 round number was the high of the 3rd of February. If that was a little bit higher, we might have made a peak C. So this is a peak C there and a peak D in the last week. So far, this is C, and that's really still very positive looking out for Priceline. Now let's look at the weekly, the monthly, and the weekly has been very good, strong in the technicals, the MACD and stochastic, and the monthly is still very strong, even though this might turn out to be a peak F at this particular point with a bunch of time to go for the end of the month of April. This is still a very good looking chart, but certainly there's a correction here. Google, same thing. I believe Google made a peak E. Basil Chapman, 877-927-6648. Let me just double check here. And we'll be right back after these messages.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game, risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, everyone. We are back. Basil Chapman. And I wanted to do this because it's so important right now to be checking out exactly what's working. You know what? The euro, the EUR-USD, spent some time on talking about this on Friday. Say there's a real good chance that it's going to be coming back to test the lows of 1.30. That was the low of the 15th. The 1.297 area, the low of the 16th of February. And lo and behold, today, where did the euro go to? It went to 1.29939. But, excuse me. Whoops. The stochastic is flat at 25%. It should actually be the beta, the fast-moving average, should be decisively over the slow-moving average. So this is, be careful, this is a balance, but there's a chance that the euro is still going to do some more testing. That's number one. Number two is if you look at the week, that's the daily. If you look at the weekly chart is actually holding very well. You can see from this chart that if it cracks the 129 support area, then you start to get a much stronger arch pattern. That arch pattern is formidable. So it needs this week by Tuesday afternoon or Thursday afternoon to quickly try its very best to get over 1.32. It's going to be tough. 1.325, somewhere around there, to show that it has the strength to get back into that ugly candle of a few weeks ago. It was the week of the 6th of April. Monthly chart still is very negative because that 9-period exponential moving average at 1.34 just has not been broken. Look at the dollar. Now, this is fascinating to me. The dollar made a move to a leg B in the daily. It's pulled back. It's got that falling axe pattern. I can't remember if I spoke about it. Yes, I did. I spoke about it on Friday. Said it has to break decisively and close. It's not just to break. It's going to close above 80.18, the high of the 5th. And then it's got to power within, I'd say that it should be quite quickly towards the 80 points. Yeah, 80.74 high of the 15th of March. If it does that, all of a sudden, and what I did for my subscribers, I showed the, I wonder if I can do it now. No, I can't. Maybe at the breakout. It showed that the weekly chart pattern of the GLD below the UUP, which is the dollar bull ETF, that gold was real close to breaking the 157 weekly support. Very important support. It's been in like a 2-year bull market. And if it starts to crack and close underneath that area, all of a sudden you've changed the pattern completely. You've got a dreaded H pattern, and that should help the dollar to break out. Yet look what happened today. The market spiked sharply early this morning. S&P was lagging tremendously. Isn't this a crazy divergence? Look what's happening. If you look at my charts that I show my subscribers every day, and oh man, I do a lot of work every day to try to explain exactly what I'm looking at and why. The 120-minute chart has tremendous resistance at 12,999 in the Dow. If it breaks above 12,987, it starts a leg C up. If it pulls back, breaks under the low of today, that's a dreaded H. That's very negative. But the VIX, the 120-minute volatility index at 2106 the other day, gave a short-term peak E sell signal, and then it developed into a deeper one, going all the way down to 1720. I said I'm a little concerned that the volatility index is still holding closer to 12 than down at the 1716 area, 16 area especially. Well, if you look at it now, you'll see that there was a tremendous move earlier in the day to 20.42 after the close on Friday around about 1879. 1955 was the close on Friday, yes. So now what's happening is there's a pullback, and if that pullback starts to take the volatility index down below, let's call that 1840 anytime today, that should really help this market. Couple of things are happening. When you look at the ARMS, the Richard ARMS, the short-term trading index that was developed by Richard ARMS, that's holding at 1.20. It didn't spike very high today, and it didn't spike very low. It's kind of in a little overbought situation. So this is going to be something to watch, because if during the day it suddenly drops to the 90s or 80s, that's going to be buying for the market. And if it starts to spike and goes above the day's high of 1.51, you will see selling coming to the market later on in the day. But here's what's fascinating to me. The arch formation in the daily chart that I'm pointing to right here shows quite clearly that a bounce off this level is really important, and the further away you get as a propellant towards the upside, towards the 13,000s, the better it'll be. If it starts to break down, that'll be not good. But what I wanted to talk about divergences, the S&P low of 1340 back in March, only 1357s just recently, back on the 10th of April. And now it's holding, and it's a little weaker than the Dow. Man, is this an interesting market. I'll be back. Basil Chapman, 877-927-6648. Oh, I'd love to take your calls. It's a great day for taking calls. It's a great day.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. And these are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, 877-927-6648. And you remember on Friday, was it Friday or was it even Wednesday? I don't remember when it was. Last week, I was talking about the different indexes, the different stocks within the IBD 50, top 50. And believe me, when the market is moving higher, there are a lot of fund managers. These are big buyers who gravitate immediately towards these stocks because they know when they kick in, they give really strong performance percentage gains. When they kick out, and some of them are kicking out right now, they have a problem. For instance, RGR might be holding up. I don't know. This is number one. Storm Ruger made a peak E-top in the ChapmanWave at 53.29 on the 3rd of April. It's probably, it is a peak D. I don't know whether it's going to be a series. There's no sell signal yet in the weekly chart, but certainly in the daily there's a sell signal to sell mode, which says be careful because if RGR is the symbol at 49.19, if it breaks under the wick of the candle of the 11th of April, 47.42, not only will it test the wick of the candle of 410 or 46.17, you could start to fill the gap. I want you to talk a little bit. I want to talk about a couple of things today. Gaps. I want to talk about the gaps, how I like to look at gaps. Gaps to me are just like a candle. It's just like another little signpost that says, don't worry about this. If you're on your way to New York and you're from Boston and you've passed Framingham, and there's a little bit of a skip or a jump, you don't have to go back and fill that. But as you get to New Rochelle or something, if there's a little problem there and you need to go back, that would be the first level to look at. And this is really like the RGR has that particular area, the gap of the 22nd of March, 45.11 was the low. The day before, it closed at 42.30. That's a huge gap. If you go to Apple has that gap I spoke about. Was it 575? Yep, 575 gap. That's number 2 on the list. ALXN is number 3 on the list. Alexion, I've spoken about this many times. The Alexion has made a peak D top in the daily, probably a doji peak F top. I'm not sure yet whether I can call it an F. It's an F/B in the weekly, but Alexion Pharmaceuticals develops drugs, cancer, autoimmune, hematological area. Could be making a peak F in the monthly, and I have to watch this really closely because there is not a gap, but there are a series of sideways moves in the 85 area that says that the whole 85 to 83 area is going to be absolutely important for it to hold, because if it breaks that would be a very negative sign for not only the daily but the weekly, and that would point to the 81.85. It's at 87.64 right now. I'm saying these are the possibilities. Now, in all of these stocks, any big rally to the upside, any what I call at this point in NASDAQ type stocks, any counter trend rally towards the highs, you get within just a close proximity of the high. I have to watch it really closely. Why? Because it could be a double top, or you could have the cup and ladle breakout. I just don't think that's it. I think we need to have a consolidation. If you look at GNC is in fact GMC Holdings. It too has made a peak F top in the daily. It's at 33.34. Probably a peak D top last week was confirmed in the weekly. MACD still good. Stochastic still good. Only leg B up. Now this is a stock you want to be buying on a sharp pullback, or looking to buy. So we were looking at the 29 to 28 area to see how it holds. Let's go to our first caller. We've got George in New York. Hi George, how are you?
Basil, good morning. How are you today?
I'm very well, thank you. How are you?
Good, very good. Basil, today I wanted to look at a stock called Infosys, INFY.
Yes.
They dropped a lot last Friday on guidance. Earnings were okay. So the question is, where would you see this coming down to start building a position?
Okay, give me 1 second. In my CD introducing the ChapmanWave methodology, there's a particular technique that I call the smooth peak G. What happens is when you get to a potential peak F in the market, in any particular price movement, the fifth highest peak. The sixth highest peak. What you want to be looking to see is there should be an immediate sharp pullback, and that should continue for a second bar. So it's really an ugly looking peak F top. Sometimes you get just a modest pullback, and within 3 bars it goes to a new high, which almost looks as if it's a continuation of that original peak F, and that's called the smooth peak G. And that peak G says you've got to be very careful, because on any pullback, if you start to pull back, have a rally attempt to make that pattern I call the H pattern, and then break down, you can go much deeper. Well, this has made 3 of them, and that says to me that the 46.12 area is going to be absolutely critical, because if it closes right now, INFY is at 48.02. What one normally sees in a very sharp gap down, and this is the daily chart. Let me just finish the weekly chart I had these all notated. I noticed I even lost some of my EWs, EWH and EW, etc. in my chart, so I'm going to have to go redo those. So let me just get this done. Okay, retracement, the H, okay. Now there's another pattern that I talk about in my CD introducing the ChapmanWave methodology. It's a technique we follow very closely, and that's when a pattern that looks like a lowercase h has a successful test of the left side low, makes another H, which says that it should go towards, but probably won't break above the previous high of the arch. And if it comes down after that, that second part of the H pattern, which actually looks like an M, is the most vulnerable, as it's liable to test the left side low. Now that's the way the CD chapter is the dreaded H can become an M. That's the way it goes. This says that the move in Info Systems Limited from 68.52 back in August of 2011 at what did I say, 68.52, came plummeting down to 46.49 and then 46.13, 46.12, September of 2011. It then ran up peak A, peak B, peak C, pulled back, held the left side low, and then made another series of highs, but it did not break the 61.48 high of the week of the 28th of October. That's the H that goes to, let me just make this, for those of you who are looking at Tiger TV, I will make that a purple. That looks exactly like an H, a rather large arch, but it's an H. And that goes into an M formation, fails to break out above and close above the previous high. And it says be careful because it's almost certain to retest the area of, in this case, 46.12. Now, here comes the real test. And here's the answer to your question. When a stock gaps down sharply, there are two types of patterns I look for. One is where the second bar does not break the low of the initial gap down bar, and it closes towards the upper end, and then the following day, instead of breaking below the low bar, in this case it's the low of Friday, which would be 48.52, it bounces, and it not only bounces above, in this case 49.53, the high of that bar, it closes above because it says it's going to fill a portion of the gap down. Today's action says no, this is just very weak. So we're looking at a weak stock, and I think it's incumbent upon you, I think you're absolutely correct, to be waiting for two signs. One is it's a sign that it's going to stabilize at a certain point, and now we're going to look to see where that would be. So give me 1 second. I'm just drawing a left side, right side price time match. Should we go to this week? Yeah, this week says be careful because this is the week that we give you a left side, right side time price match if it cracks and breaks underneath 46.12, closes underneath it. Two things are happening. I have to quickly go to the monthly chart. Monthly chart says, if I said to you, George, that there's a chance that this stock, if it breaks and closes under $46, can go towards the most important doji, which has a low of 39.33 in August of 2009 and a high of 44.67. That's the candle. That says if it goes down there, I would still say be careful. Rather wait, because it's shown, it's given us proof with dojis, etc., with what I call the silent doji, in the cluster pattern of 2009 going into the end of 2008, the beginning of 2009, the 200-period moving average has been an absolutely fabulous support level. Even if it breaks under it, says at that point you can start looking to buy. That is at $34. So I'm going to say hold off. Whatever the news is, it wasn't good news.
Right. And ironically, my fundamental analysis has shown a margin of safety about 39 to 49.
Well, there you are. So what I would say to you is keep it on your list, and the moment it starts, if it closes under 46, immediately you want to start targeting the 41 to 38 area as some kind of holding pattern. If it breaks that, it's going all the way to 34. At that point, it might actually restart. It does that. It might start a brand new buy signal.
Yes. Okay. Very good then. Appreciate it.
Good.
Do you have time for one more?
I do, yes, certainly.
Express Scripts, ESRX?
ESRX. So now the deal is done with
that worked out very good.
That was fabulous, and you just had a wonderful trade on this. And I'm
arbitrage worked out well, thank God.
Very well. Now, what we're going to do is, folks, we're looking at ESRX, which is Express Scripts, and they're getting they're fewer and fewer now in the business, right?
Yes.
They took over, and absolutely, I know I have it. It's Medco, and Medco, so far they've still been pretty darn good. So I'm hoping that, from what I hear with this Express Scripts, a lot of people complain about it, and I know a lot of physicians did and loved Medco. I'm hoping that they take the Medco plan and they use it because it seems to have worked very, very well. Now, as far as the price is concerned, the price is saying, hey, we like what's going on. I'm just finishing this up here. Give me 1 second. So that high, I'm looking at ESRX 75. Okay, here we go. A, B. And, oh, it's real tight. C. I'm expecting, I did that too quickly. I knew I missed something. A, B, C, and there, what is that? Okay, so this has a high of 5506 on the 27th of February, 5506, and then it goes to 5509. That's all I needed. So I've got the D in place, and then there's a potential for an AB. I'm calling this E/B. So here we go. This is my analysis. If Express Scripts in this particular market, let's just imagine a worst-case basis, and the Dow closes under 12,700 this week and actually starts to slide to the 12,500s. The S&P is going all the way back to the low that it made to the 1340s that it never got to on this pullback, 1340s, right. And Express Scripts is able to hold, there is a gap on the 55.36 on the 2nd of April, and the low is 54.36. If it is able not to even fill that gap this week, but instead it makes a slightly higher high and goes to 57.58, that is really strong action, and that's part of the rotational correction, because the weekly chart is looking fantastic at this particular point. We've only started this week, but so far it's looking really good. So I'm going to say to you, if you're holding it, I would remain holding this position. The only time I would start thinking of maybe getting out a little bit to take some profits that you want to put back, if it really starts to decline, you'd put back, it's at 56.92, somewhere in the 51 to 49 area, is if it slides and closes underneath 55.52, the low of the 10th, it's probably going to fill that gap, and that gap has a high of 54.
Wonderful. And in fact, my margin of safety, to give you an idea on fundamental, is anywhere from 53 to 54.40.
Oh, very good. That concurs with what I'm looking at. Yes.
Very good. Appreciate it, Basil.
Congratulations, and that was a wonderful trade. We followed it here, and I hope a lot of our listeners were following it with you.
Yeah,
Thank you very much for calling.
Thank you, Basil, and have a good week.
And you too. Thank you, George.
Be well.
So, thank you. You too. Now, what I'm looking at, folks, is this. The fact that selling is being met with buying is being met with selling today, and whatever it is in the Dow, I know that DuPont is up. I think Caterpillar is up. DuPont was up a little bit before, up 49 cents. Let's see what GE is doing. It was up before, it was up a couple of cents. Now it's down 2 cents. You've got a very interesting market here because UTX was trying to rally. Now it's down. You've got Triple M. These are my four key Dow Quartet index stocks. Triple M is up 40 cents at 86.09. This is really what I'm looking at. If you are in a stock that's holding really well at the end of the day, wherever the Dow closes, if your stock is actually, well, not the Dow, I'll use the Dow now only because it's the strongest of the indexes. I'm just using it, but most probably I should also say the S&P. If the S&P, whatever happens in the market today, if you're holding a stock that closes more at the highs than the lows, that's part of the rotational process. And that's saying you're in a stock that money managers are still finding attractive. If you're in a stock that goes with the market and closes down sharply, that's a stock that if you're short, that's the position to be having. I'll be back and we'll do a little wrap as soon as I get back. Basil Chapman, 877-976-48.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, everyone. Basil Chapman. Now, let's just continue looking at those IBD top 50 because it's really important. Believe me, if money managers are selling here, you want to know that it makes the upside very special and specialized. And it makes the downside a lot easier to comprehend because you want to go where the tide is going. So that says if we look at this, I'd gotten to price side, Ulta is next. So Ulta is, they call themselves Ulta Salon, Cosmetics and Fragrances. They are trading right now at 92.86, leg F. I believe I'm calling it F for now in the monthly chart. It could be a parallel F/B, but I'll call it F for now because there's no signal at all. And the weekly chart is making a potential leg D today with a new high this week. So it means you have to wait all the way to next week to get a confirmation of a peak. that doesn't make any difference because we're looking at a stochastic that is at 96%. The MACD's way up, very strong. So now the bar that we're looking at, the candle we're looking at is today. And that says there's been a complete failure of the MACD going lower, a divergence as price went higher. I really do not like that, except on those occasions when it's starting a brand new buy mode. That's exactly what you'd like to see. But to start a brand new buy mode at highs, that's unusual. Now you can see that the stochastic is at 62%, not good. So Alta says that if it cracks and it breaks and closes under 91.61, hey, that's 1.25 points from here. But if it closes under there, you're going to look at that 120-minute chart, and that 120-minute chart says 88 would be the 200-period exponential moving average that it hasn't even been to since February the 2nd, when it broke above it. That would be the downside target. That means that if it can hold steady here and by tomorrow get back above the 93.80 9-period exponential moving average, that's good. So it's a start. It says that there's a good chance that Alta is probably going to be pulling back real soon, if not starting tomorrow, from today's action into tomorrow. Look at cores. Now, this was a spectacular stock from an IPO. It went to a leg A in the daily. It's retail apparel stores. Rich, what's his name? Michael Kors Holdings is trading at 41.23, down 239. Now, what's really important to me is that the daily went to a peak D at 50.69. Where's the gap? So many of these stocks had gaps on earnings. At 43 round number high on the 14th, the low is 39.29. The day before, the high was 34.87. A huge gap. That gap, I'm pretty sure, that's going to be very important for me. It's going to get filled, and if it does get completely filled, we're looking at the 33.22 200-period exponential moving average as the potential for where it could have a very strong bounce. Can it start leg B up in the monthly, leg D in the weekly at that particular point? I'm not sure, because this is an IPO, so the history here is a little bit jagged. It's a little too short. If you look at LQDT, it's been spectacular. And this is the stock that is making leg E now. It's still looking strong. I'm not giving any signals on this other than to say it's still in a buy mode. Leg F/B in the weekly. So LQDT, Liquidity Services Inc., trading at 51.60. So the more you go down these stocks, down the list, Lululemon and all these others, they are saying, many of them are saying, we're getting to a kind of an area where we're having some trouble. So I'm saying be a little bit careful. But there are some high techs that are still doing very nicely. So now let me just give you the parameters before we wrap up for the day here. Now, the Dow, I'll do it on the Dow because I'll do it on both. It doesn't matter to me. The Dow got repelled at the 14-period moving average this morning at 12,974. If in the next 2 days the Dow closes underneath 12,800, that 12,710 low of the 10th is pretty much going to be tested. If by the end of the day the Dow closes at 12,944 above the 9-period moving average, well, that's good. And same thing with the S&P. The S&P is weaker than the Dow. S&P must hold 1363 or 1357 is tested.
Are you looking for a precision edge in the market?